Did you know that while tariffs could slow U.S. GDP growth by up to 1% over the next year, they're actually creating massive investment opportunities for us in very specific sectors. If you've recently come into wealth or already have it, understanding these economic shifts could be the difference between watching your money erode or seeing it multiply. In this video, I'm going to reveal 3 critical insights about tariffs that most financial advisors will not tell you. Why the U.S. economy is uniquely positioned to weather tariff storms, number 1. Number 2, which sectors in the stock market are poised for explosive growth despite economic headwinds. And then number 3, the specific investment moves you should consider if you've recently received a large sum of money or already have a large sum of money. The economic impact of tariffs, let's go ahead and talk about those, the unique position of the U.S. economy. While tariffs will likely reduce U.S. GDP by somewhere between 0.5 and 1% over the next 12 months, there's a critical fact most people miss. The U.S. is remarkably insulated compared to other trading partners. One, our economy only relies on international trade for about 25% of GDP, compared to China at 37%, Canada, Mexico at 73%, the EU, which is Europe, at a staggering percent. This means that while other countries might experience significant economic disruption, the U.S. is positioned to bounce back more quickly and even leverage tariffs to strengthen domestic production. Let's talk about the sector-specific impacts and the opportunities. Not all sectors are created equal when it comes to tariffs. They are going to be impacted differently. This isn't a one-size-fits-all. You need to understand that. Some vulnerable sectors that I don't like right now with these tariffs are automotive, electronic, and agriculture. I think they face significant challenges due to the complex global supply chains. Companies heavily dependent on international revenue streams may see earnings pressure, and I think these sectors will. The growth sectors, these are the ones I like, I think can benefit here. Domestic manufacturing, I talked about that in a previous video, is seeing unprecedented investment, over $110 billion in private manufacturing investments nationwide already. That's almost $1 trillion. Number 2, the semiconductor industry is receiving $32.5 billion in government grants and $5.5 billion in loans across 23 states. They always say follow the money. In this case, follow those grants. It's always been good investment policy to follow grants, government grants. And number 3, I think major companies like Novo Nordisk, Siemens Mobility, and Schneider Electric are making substantial investments in U.S. production facilities. The key insight, tariffs are accelerating a massive reshoring trend that creates lucrative investment opportunities in specific domestic sectors that we just talked about. So here's some strategic moves you can do with your wealth. If you've recently received a large sum of money or already have it, here's what I think you should consider doing. Number 1, go ahead and rebalance your portfolio, reduce exposure to multinational companies with high foreign revenue dependencies. Number 2, I think you want to have a strategic sector investments. Consider targeted investments in U.S. manufacturing companies positioned to benefit from reshoring. We're only at the very beginning of this. Number 2, look at semiconductor manufacturing. Manufacturers receiving what's called CHIPS Act funding. And then number 3, explore pharmaceutical companies expanding U.S. production facilities. And then another strategic move you can do in the final one, number 3, is risk management. Maintain higher cash reserves than normal to capitalize on market volatility. We talked about that in another video. As the market's doing its usual up and down crazy stuff during all this news, there'll be some opportunities to buy some stocks that are beaten up. As we talked about, Warren Buffett has made a living and becomes extraordinarily successful buying stocks after they've been beaten up due to news, knowing that they're not going to go bankrupt, knowing that they'll be back to fight another day. Number 2, you can consider within risk management, you can consider shorter duration fixed income investments as interest rate uncertainty persists. I've noticed that interest rates move in 40-year cycles, and we just started our last up interest rate cycle in 2021. Interest rates bottomed. So it's conceivable that interest rates could be going up. Generally, of course, they'll have up and down, but during that time, they could be going up until 2061, which is a long cycle for interest rates. And that's just how they roll. That's how they've rolled historically. There's no guarantee, of course, that it'll go up on this next 40 years. We don't know, but that's what it's done the past 100. And then, as always, you want to diversify across sectors with varying tariff sensitivity levels. We always talk about this. Most sectors are highly correlated. And of course, we do have sectors like consumer staples and in particular utilities that are much less correlated to the S&P 500 at large. Tariffs create both challenges and opportunities for us. The key is understanding how these tariff shifts specifically impact your wealth situation. The right strategic moves now dramatically will enhance your financial future if you steward this correctly. Are you ready to create a customized plan for your wealth in this changing economic landscape? Then just go ahead and click on the link to apply for a free wealth planning session with me, or you can take my quiz and see if you have enough to retire. Your financial security deserves a strategy built on understanding the full economic picture. We can also review your portfolio at no cost and give you a second opinion on that, which we have a team that does an excellent job with people that come to our office for that all over the country. We have clients in 17 states. And as a reminder, if you like these videos, you find them useful for you, then please, I ask that you go ahead and subscribe. We'll have more videos as we continue to look at what's going on and how you can become a better steward of what has been entrusted to your care.